Sentiment analysis. So personally, I think that sentiment analysis is valuable, but at the same time, it's not substantial enough to be a standalone type of analysis that you can base your Forex decisions on. I think sentiment analysis is more of an auxiliary type of analysis that you can, and you probably should, add to your own analysis to make it more robust. So sentiment analysis implies trying to assess and understand the general mood in the market, what traders are thinking, what their expectations are. And a good starting point for that is Twitter and Facebook. So you can go on Twitter, search a currency pair, and see what people are thinking, what they're talking about, what they're kind of expecting. And also you can find that out on Facebook, in certain groups, in certain circles, other social networks like Google+, basically any type of social network, including forums. Why it's important? Well, because at the end of the day, people make transactions in the market, and it matters what people think, especially when it's a lot of people thinking up. You know how ideas can be viral sometimes, and something can pick up out of nothing, like somebody says the euro is going up, and then just spreads very quickly across Twitter, and everybody starts feeling that way, and then in a matter of an hour or so, you actually see the euro going up. Once again, it is rare that just purely sentiment drives the market, but it's good to assess it and keep it in the back of your mind. Also, sentiment is reflected often in currency pairs. You'll eventually learn how to pick it up from the charts, some types of sentiment. For instance, a good one is when traders are uncertain and they're nervous, you'll see consolidation on the chart. So the price amplitude will be reducing substantially. And moreover, we'll actually witness some of these situations in our live trading on a real account in the further sections of this course.